So, hello and welcome everyone to this session. And today is the third session. And first session, I have explained about how to approach the descriptive part. And I hope you have watched that video. And yesterday, I have started our first lecture. In the very first lecture, I have explained the syllabus. In the syllabus, I told you that I have merged the entire syllabus of paper one, that is ESI and economy part with the finance part, and I explained why I have did that thing, so you can get the proper understanding of the entire part, and you are able to not only write a good answer in the exam, but also you can attempt some objective type of question which they generally ask in part one. Okay, so and after that, I told you that I'll start the evolution of financial system, and I also told you what is the financial system. Just going to brief you today. What is the financial system? I told you supply side means the production, and supply have three component. What is three component? That is land, labor, and capital. So for production, you need land, labor, and capital. And whenever you hire these services, you have to make payment. And these payments will go to the owner of land or the labor or the owner of capital in terms of what? Income. It go in terms of income. Right. So this income can be used for consumption and savings. Right. And this consumption will increase the demand and price, and this further boost will supply. So our savings can be converted into investments. So the part which converts our savings into the investments, the part which converts our savings into the investment, that come under the category of financial system. Financial system. And I told you the financial system is basically a system where there are financial intermediaries as well as financial market. But to make fair practice in the system, we need regulators, right? I told you we need regulators, and I also told you that regulator will come later. First the financial products and intermediaries will be there, whether it is banking system or it is financial market or it's an insurance market. All the components, all the intermediaries came first, then the regulating body came later to regulate the things in the proper manner, right? But we first understand and learn how this regulator will work, and from regulator we will go to the related part. For example, we will learn about RBI, then we will go to the banking system. We will understand role, power, functions of SEBI, then we will understand what is the financial market of India. And I also told you कि for your better understanding, I'll create a diagram for you. So here it is the Indian financial system, right? And in Indian financial system, first of all, it is divided into two parts. One is formal system or organized system, and another is informal system or unorganized system. That is related to what? From savings to investments. From savings to investment, we have a system that is Indian financial system, and that can be broadly categorized into two parts, that is formal system or unorganized system, right? So when we talk about the informal system, where they are the money lenders, local traders, landlords, they can take money, they can lend money on the interest. So these unorganized activities are being there. Why it is unorganized? Because they are not being governed by any parliamentary law or executive law. They are based on what? They are based on just verbal trust, right? There is no proper law for that lending or depositing, something like that. There is no proper law. That is happening only on the basis of verbal promises and verbal agreement, right? So that is why it is comes under the category of informal system. Though they are not going to ask this question, but you must know. And why you must know? Because if you will see the broader spectrum, Indian financial system, we will beyond, and we will go to entire Indian economy. Entire Indian economy, in entire Indian economy, formal sector is working along with the informal sector. And because of presence of huge informal system, sometimes the policy which is made in context of RBI's monetary policy or the policies implemented by the government of India, there is a lot of hindrance and problem in the implementation. Why? Because policies are made for the formal system and they are not applicable or working in the informal system. And informal system is a big chunk in context of Indian economy. So whenever we are going to find out what are the problems in the implementation of policies and schemes, we always can highlight the presence of informal system at a larger scale. Example, monetary policy and its transmission means whatever the policy is formulated by Reserve Bank of India with a desired target. But when we see the result is below expectation or beyond expectations, right? Because informal system will take those things as per their requirements, not as per the guidelines or as per the systematic requirement or the system of monetary policy, right? So this is why sometimes monetary policy implementation or government of India's fiscal policy implementation have lot of issues. So whenever you want to write an answer problem regarding implementation of any policy in the economic parlance, you can identify one reason as a informal system related problem in India. So whether you are writing on budgeting or not proper implementation of anything, you can mention that thing. Means one reason you can always cite because of the problem of informal system. That's why you should know about this thing. Okay. Now when we come to the formal system and we are going to study this part in detail, the formal system have basically three components, and first is regulators, second is financial intermediaries, third is financial system. As I told you, we will start with regulators. In last class I also told you we will start with the regulators, then we will go to the uh, next part which is related to it. For example, RBI to banking system, SEBI to financial market, right? So apart from these regulatory bodies, these are all regulatory bodies. They are here means they are in the system because of law made by the parliament, and with the law made by the parliament they are being formed, right? So they are bodies. Whereas ministries are also there, they also play a very important role to regulate the things. Though they directly do not regulate the things, they facilitate the regulators to function effectively. I repeat, they do not directly regulate the things, but they will facilitate all kind of the requirements of these regulatory bodies so that regulatory body can function in the proper manner, right? And these two ministries are very important, and especially Ministry of Finance, right? So it is very important to understand what role, power, function of finance ministry, how they are impacting our financial system. right? So Ministry of Finance is one of the most important ministry of government of India. Not only India, in any country, finance ministry is very important. In some country, it is called as a treasury, right? So treasury. So especially in Britain and US, it is called treasury, so treasury bench, right? And when they say treasury bench in the parliament, that means it is related to government, right? So in India, finance ministry at present, finance ministry at present have six departments. There are six separate departments in the Ministry of Finance, and they are responsible for different work. So first is Department of Economic Affairs, second is Department of Revenue, third is Department of Expenditure, fourth one is Financial Services, fifth one is Department of Investment and Public Assets Management. Most of the time in newspaper, it is written as DIPAM, DIPA, Department of Investment and Public Assets Management. DIPAM, it is mentioned there, right? So you can keep this thing in your mind. This word DIPAM, that is Department of Investments and Public Assets Management. Historically, it was not part of Ministry of Finance. When Indian economy uh, implemented reforms, I told in the very first lecture when I was briefing you about the syllabus, I told you we will discuss the Indian economy in history of Indian economy in two set. One is till then 1991, before independence till then 1991, and second part is from 1991 onwards. So from 1919 onwards, government of India opened many sectors where the private companies were not allowed, right? And gradually government of India found that many of the government companies are not working efficiently, so it is the right time to sell off their holdings in that government company. So when government starts selling, for example, if a company which is wholly owned by the government of India, means 100% share is of government of India. For example, that is ABC company, and government has decided to sell 10%. So we will call it as a disinvestment. So government is going to sell the shares, right? When government is going to sell 26%, right? If government is going to sell 26%, that means suppose X company got the 26% in that company. So company X is going to be in the management board, right? So if government want to improve the managerial things in that company, and for that purpose, government can offload around 26%, then that company or those companies who are going to get 26%, they will now be in the management board, right? And sometimes decisions have to be taken with the majority of 3/4, third fourth majority, 76% majority. So if any decision, crucial decision have to be taken, and for that you need 76% majority. But if you will offload 26%, that means you have only 74% majority, right? You have only 74% shares, not 76%. So you cannot take a radical decisions. You cannot take the radical decisions. So sometimes you have heard the term strategic disinvestment. Strategic disinvestment. Why we do not want to completely sell that company, but we want more efficient working of that company. So we want to implement those things strategically. We do not want to implement in whole soul manner. We want some strategy. So we will call it a strategic disinvestments made by the government. Whereas if government is going to offload or sell 51%, or in gradual manner, or in one go government is going to sell 51%, then we can call it as a privatization. privatization. So sometimes students get confused. What is disinvestment? What is privatization? If the majority shareholding, minimum majority is 51%. If government is going to sell more than 51% in that company, that means government went for the privatization, right? And if government is just selling their shares but still government hold 51% or more than 51%, right? And they are going to sell some of the shares but not below 51%, it will be simply come under the category of disinvestment. And when the disinvestment is done with certain predefined objectives, then it is called strategic disinvestment. So, three terms: strategic disinvestment, investment, and third one is privatization. If you are going to lose your majority by selling of the shares, privatization. If you are going to sell some shares but not below 51%, that is disinvestment. And when you are going to sell something, some shares with an objective, a particular objective, we want to change the management or we want to make more efficient management, then we can call it as a strategic disinvestment. So this process was generally started in the last decade of 20th century, and at that time government has created a separate ministry of disinvestment. However, when the India government fall and in 2004 UPA government came into the power, they reduced the role of ministry and they made it as a department of disinvestment under the Ministry of Finance, right? And the name was carried even till then 2014. When again India came to the power, then they emphasized the need of more, better, and effective. More, better, and effective. More number of companies going to be disinvested. Effective disinvestment should be there. So that is why name was changed to Department of Investments and Public Assets Management. Investments and public assets management. So whatever we are going to get it after selling the shares, we are going to effectively invest in other places. So more positivity came here and it is known as Department of Investments and Public Assets Management. Another is Department of Public Enterprises. All the government companies come under this category, right? I'll explain you in detail. But before going to this part, first try to understand the role of Department of Economic Affairs. I have written here is most powerful among all departments of FinMin. FinMin, this term many times it is used rather than using the full form Finance Ministry, Ministry of Finance, newspapers, and some good article, or you can say some newsreaders, they use this term frequently, FinMin, right? So you can keep this thing in your mind. FinMin means Ministry of Finance, very simple. So it's the most powerful among all the department and oversee economic activity of all departments. So what is happening here in all four departments, that is supervised by economic affairs, right? And they also coordinate with all the ministries, bodies related to finance and economy in India. Department of Economic Affairs. So every department is headed by a secretary, but the most efficient one is going to head the economic affairs. So being as a secretary to the economic affairs, for example, our present governor of RBI, he was heading this ministry for a long time, and when he was announced being as a governor of RBI, at that point of time he was uh, economics affairs secretary, right? So the person who is holding this post is very important person. So maybe they are going to ask in not only in this RBI grade B or some other exam, who is present chief economic advisor, like who is this person, maybe person X is heading the Department of Economic Affairs, and they can ask his name ki this person is associated with which of the following department or ministry, then you have to answer. So whenever you are reading the newspaper, you can keep this thing in your mind. So sometimes in short it is known as DEA, right? DEA. So it's very important, and its role is supervise all of the department, and they also responsible for preparing and implementation of union budget, preparation and implementation of union budget, right? After that, the second is Department of Revenue. Department of Revenue is responsible for all kind of the receipt received by the government of India, especially receipts received by the government of India through taxes. Right. So it is mentioned here. It exercises control with respect to the matter relating to all direct and indirect union taxes through to statutory body. What is a statutory body? Do you know what is a statutory body? Niti Aayog is a statutory body. Yes or no? Is 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 it a statutory body? Do you know? If you don't know, please listen very carefully. There are few terms which is used. One is executive body. Next is statutory body. Third is constitutional body. So if question is being asked, RBI is executive body, statutory body, constitutional body, or none of the above, then what should be the answer? RBI is a statutory body. How it is in a statutory body? First, I'll explain what do you understand by statutory body, constitutional body, and executive body. When any organization is formed with law made by the parliament, when any organization is formed with the law made by the parliament or legislature, it is a statutory body, right? Whereas if any organization is formed with an order of government, any organization which is formed with an order of government. For example, when India came to the power, they scrapped the planning commission and they have formed Niti Ayog. So this Niti Ayog was formed with the government of India's order, right? Government didn't went to the parliament, presented the bill, passed the bill, and then they formed the Niti Ayog. No, it was formed with an executive order. Similarly, planning commission was also formed with an executive order given by our former and first prime minister Pandit Jawaharlal Nehru. So his government passed an order and they formed planning commission. So, any organization which is formed with the executive order, it can be scrapped or it can be renamed with another executive order. Pandit Jawaharlal Nehru formed Planning Commission with an executive order. Prime Minister Narendra Modi scrapped that organization with an executive order. Right? So you need not to go any parliament or somewhere. You just pass the executive order, and it will be disappeared. Similarly, for example, if after next general election new government will came to power, then that Niti Ayog is on the mercy of that government. Whether they want to keep it or if they want to scrap it, they can scrap it immediately and they can form. Or for example, if Congress will came back to the power, maybe they can restore the planning commission and they will scrap this Niti Ayog, because all these are the executive body formed by the order of government. Now come to the statutory body. How a statutory body can be formed? Suppose that Prime Minister feel that now Niti Ayog should have better power and they can effectively use those power. So people can say that still they have a lot of power, but organization and people in that organization can be removed with just an order of the government. So they are working on will and wishes of the government, right? Will and wishes of the government. That means they must keep this thing in mind. If they are going to do anything which is not going to please the day of the government, they will be removed. They will be removed by the government. So they are going to have this fear always in their mind. Fine. But if any organization is formed with the law of parliament, right? If any organization is formed with the law of parliament, then whatever the terms and conditions is given in that law to remove that organization or to remove the people working in that organization, you can remove them or appoint them only the procedure written in that law, right? The best example is SEBI. SEBI was initially formed with an executive order. It was formed with an executive order. But when our financial market was hit by scams, one another scam, then another scam, lot of scams, then the bill was presented in the parliament and SEBI become a statutory body. Its role, power, functions are defined in the SEBI's Act, right? So government can appoint or government can remove SEBI chairman only with what is written in the law of SEBI. They cannot remove the chairman or they cannot appoint anyone in the SEBI on their own discretion. Whereas they can appoint or remove anyone from Niti Aayog, but they cannot do it from SEBI because SEBI person is going to be appointed as per the SEBI law, right? So that is why you have more freedom to do your work. Similarly, if any organization is formed through constitutional amendment or through constitution, for example, Supreme Court under Article 124, right? So Supreme Court is there, a lot of other articles related to Supreme Court are being there. So the role, power and function is assigned to Supreme Court through constitution. So if you want to change any function of the Supreme Court or any other body which is mentioned in the constitution, you have to change the constitution, and which is most difficult part, right? So that is why the constitutional bodies are most powerful bodies and have most autonomy autonomy to work, right? Whereas statutory body also have the autonomy, whereas executive body have very less number of autonomy in their work. So that's why sometimes powerful SEBI in what terms? Powerful because they can work as per law without any influence of the government, right? So that is why SEBI become more powerful. We have provided the teeth to SEBI when we pass, means parliament has passed the SEBI Act. So similarly, if government is going to present a bill regarding Niti Aayog, so Niti Aayog going to be more influential and they can work without any influence of the government, right? So these are the three bodies. So here it is mentioned to statutory boards. So these statutory board means they are formed with the parliamentary act. So it is not very easy to remove the chairman of that board until unless there is a gross misconduct or he has not followed the rules and regulations given in the law of these two boards, right? So board is CBDT, Central Board of Direct Taxes, and another is Central Board of Indirect Taxes, right? So these two boards broadly collect all the taxes, and these two boards come under the Revenue Department, Department of Revenue, right? Next is Next is Department of Financial Services. Next is Department of Financial Services. Department of Financial Services, I'm jumping to this one because it's one of the most important department, right? From especially from the point of view of your examination, and I am going to tell you in detail about the Department of Financial Services. Department of Financial Services is basically a department which is going to involve each and every activity related in the financial system. You can see that Department of Financial Services cover functions of bank, financial institutions, insurance, companies, national pension system, right? So if we will go here, right? So all the financial intermediaries, banking, insurance, non-banking companies, financial market, which is generally divided into capital market and money market. Just giving an example, huh? I'll give you the proper figure later, but just for your understanding, money market. So all these things, banks, financial institutions, insurance companies, national payment system, department is headed by whom? Secretary, additional secretary. Department of Financial Services oversee all key programs and initiatives and reforms of government concerning banking sector, insurance sector, and pension sector. Right. All these sectors come under this Department of Financial Services. Again, it is mentioned here initiatives and reforms related to financial inclusion, social security, insurance, at risk transfer mechanism. So, in your syllabus, you have na economy and social issues. So, social issues, social security, insurance, all these things come under which department? Department of Financial Services, right? Credit flow, economy, farmer, common man, all the things which is related to common man, farmer, or everyone, and it is related to finance, right? In terms of bank and insurance and pension, it comes under the Department of Financial Services, and that is why it is also responsible for the proper implementation of some key schemes. Every year in your exam, they ask questions maybe they can also ask कि अटल पेंशन योजना is implemented by which of the following department of the government of India, right? Atal pension yojana is implemented by which of the following department or ministry of the government of India? Answer will be what? Department of Financial Services, Finmin, right? Similarly, this can create some confusion, means this Pradhan Mantri Vyaya Vandana Yojana, right? So all these schemes, Stand Up India, all these schemes are being implemented by whom? All these schemes are being implemented by Department of Financial Services. We will discuss all these schemes and other schemes. You always means there is always a doubt in the student's mind. Should I go for all the schemes or this particular scheme and that particular scheme? Generally, the best way is कि most of the schemes which is working or being implemented by the government of India at present, most of the time they are going to focus on those schemes only. But sometimes they are also going to ask some other schemes. So, how to tackle those schemes? There are some key ministry and department of government of India, right? And they are responsible for implementation of those schemes. Okay, I'll do one thing. I'll conduct one separate session how to handle this scheme part, right? How to handle this scheme part, because it's maybe one or two question will be there, but students have lot of headache, lot of anxiety how to cover those schemes, which scheme should I cover or which scheme should I left. I'll explain you, I'll let you know in detail, so that first of all you will be having a peace of mind regarding the scheme and you can effectively trace all those things, right? And I also try to give you some kind of PDF where you can means I'll give you kind of a log, right? I'll give you kind of log where some basic things will be already there. Some basic things will be already there, and I will let you know what other things you can fill here, even on your own without help of any other sources except newspaper. Right. So this kind of thing I'll provide you regarding the scheme. I'll conduct one session on the how to handle this scheme part, and I'll give you this thing. Fine. So let's focus this part. We will discuss in the separate session regarding the schemes. Right. So apart from this, this department also provide the policy support to public sector banks, public sector insurance companies. Apart from that, they are also providing the support to DFIs, development and financial institutions in India. Right. Generally, development and financial institutions now comes under the category of NBFIs, non-banking financial institutions, and they are also called as a development and financial institutions like NABARD, Small Industrial Development Bank in India, India Infrastructure Finance Company Limited, National Housing Banks. So all these development and financial institutions in India, they are to provide them policy support to track their performance is a responsibility of Department of Financial Services. So for banking system, for financial system, it is most important department. But among all other Department of Economic Affairs. So suppose that we need a bad bank, right? And in this year budget, government has talked about the bad bank and they are going to implement it, right? So first, it is banks and other institutions, they have faced some difficulties related to NPA. Then Department of Financial Services came in action because they are responsible for providing the policy support. They have established some working group and they have asked RBI to also find, establish the working group and try to find out what are the problems, what are the prospective solutions. So these things were facilitated by Department of Financial Services. When some sort of solutions were available to them, they contacted to Department of Economic Affairs and said that we need a proper law, and by law we must have an organization as a bad bank so that it can resolve the problem of NPA. So in this way, government and ministries will work to help our financial system. There is a problem in the financial system of NPA, and to resolve that thing, this department, Financial Services Department, has taken initiative and they have informed the Economic Affairs Ministry that we need a law. So in this way, these organizations will work. Right. Another department is Department of Public Enterprises. Department of Public Enterprises, I told you before 1991, Indian economy was basically a mixed economy, but a lot of socialist feature, and there was a existence of many government companies. So how to manage those companies? Those companies are working properly or not? So for that we need a kind of a department. That is why this department was created, Department of Public Enterprises. One thing I just want to tell you, most of the time we use this word PSU, right? And we think that there is no difference is in between CPSU or PSU. Actually, in India, not only government of India, but states can also have their own public sector enterprises. Right? State can also have their own public sector enterprises. Central government can also have their own enterprises. So if any enterprises is owned by the government of India, government of India, it is CPSE or CPSU, right? Undertaking and enterprises are used interchangeably, right? Whereas if any company is owned by the state government, if it is owned by state government, so then it is known as SPSE, State Public Sector Enterprises. For example, Gujarat State Gas Power Corporation Limited. So that is an organization owned by Gujarat government, not by the government of India. Right. So there are two kind of the companies, but this Department of Public Enterprises is responsible for what? Responsible for CPSEs, CPSUs, right? Not for the state public sector enterprises. They come under the control of state government. But because government of India's public sector enterprises are present, have a presence in India and even abroad at very large level, whereas state PSUs, they have only limited presence and their business and profit is not so big. So that's why generally we do not know their name. But you should know this thing. Means you are unaware of name, that's fine, right? Whenever it will come in the newspaper, at least you will get na ki what is SPSU. You must know this thing. So there are the two kind of the public sector enterprises. One is owned by the government of India, and another is owned by state government, right? But here, because our exam and the syllabus, that is completely focused on central government, so and we are discussing about the central government, right? So we are focused on this thing also. So Central Public Sector Enterprises comes under the purview of Department of Public Enterprises. One more department was there, and that was department. We have discussed about the economic affairs, we have discussed about the revenue, we have discussed about the financial services, public assets management, and Department of Public Enterprises. One more is expenditure, right? Department of expenditure, how much government have to spend and where we have to spend, the spending is going in the proper manner or not. All these responsibilities come under the expenditure department, right? For your exam point of view, you have to focus on these two: Department of Economic Affairs and Department of Financial Services. Right. These are two most important from the point of view of your exam. Right. So, uh, any article or news will come in the newspaper. You can pay your attention on that news. Okay. That's why I have explained you in detail. So, I told you under the regulator category, one is Ministry of Finance and another is Ministry of Corporate Affairs. Fine. Now come to the Ministry of Corporate Affairs. Ministry of Corporate Affairs, the Companies Act 2013, Companies Act 1956, and Limited Liability Partnership Act 2008. So in India, being a company, you must have to follow certain rules and regulations, right? You must have to follow certain rules and regulations, right? And that rules and regulations comes under first Companies Act 1956. However, many things were changed in very significant manner under amendment made by the government in parliament in 2013. So Companies Act 2013 is there, right? So are these companies following the rules and regulations, they are working in the proper manner or not, or because of certain specified rules in Companies Act there is a hindrance for the financial company to work in India in the efficient manner, right? So whether we should have this rule or we should change this rule or we have to remove this rule, all these things are going to be facilitated by which ministry? Ministry of Corporate Affairs, right? Apart from doing the business accounting is also very important, and we have Chartered Institute of Chartered Accountant India, ICAI, and others company secretary, and other is cost accountant, ICAI. These three are very important part of business. Business in function and its accounting and costing part is also very important. If they are going to present the false report, then it is going to create a lot of problem. In last lecture I told you about one officer in Greece. He was jailed because he went for manipulation in the GDP data. Similarly, companies business is always mentioned in their account books, right? Account books. So that account books should be scrutinized properly, and if accounting firms are facing any issue or problem which must be resolved, then in that case, who is going to facilitate? Ministry of Corporate Affairs, right? And today Government of India has presented one bill in the parliament to make certain changes in the functioning of this institute. You can go there and read the details, right? And it is going to make certain changes in the functioning, not exactly functioning, how they are taking certain decisions. For example, if any accounting firm is not working properly and ICAI found that it is not working properly, so there is a disciplinary committee, and disciplinary committee can take certain actions. But over the years, Institute of Chartered Accountant of India has said that the disciplinary committee is not working in the proper manner. There are some deficiencies, right? So Ministry of Corporate Affairs have taken these things in the cognizance. They have established the working group and committee and working group has given the report, and on the basis of that report government is going to change the law to make disciplinary committee of this organization more effective, right? A lot of articles and news is coming these days in the newspaper regarding that, right? So I'll discuss this thing when I'll discuss the accounting part of India, how the accounting is being done when there is a section on national income accounting. So in accounting part I'll also deal these things so that you can get a proper understanding for this thing, right? So in that way, Ministry of Corporate Affairs will help and assist for effective functioning of our financial system. So these are the two ministries which are working as a regulator, not in very direct sense, but they always try to facilitate these organizations to allow them to make their functioning smooth and effective. Right. So this is the role of these two ministries. Okay. I hope it is clear. Right. If you have any issue regarding that, you can post your question. I'll answer that question, or I'll try to make a separate video on that thing and I'll post on our channel. Right. So if you feel that ki certain thing you want to understand, right. So you can you can simply ask. We will try to make the video, right, which can help you. So any issue which is bothering you, right, please mention in the comment. I'll definitely try my best to create a video that can be very helpful for your understanding. Okay, now we have to move the most important element of our financial system, that is RBI. Again, I'm emphasizing the most important element of our financial system, or if I'll say, which is the most important, single most important organization of any country's economy, not only India, any country's economy, the single most powerful organization. I'm not talking about the ministry. I'm not talking about the ministry, I'm talking about the organization, then that country's central bank. That is why it is known as a central bank. This is the reason why we will call this as a central bank. Right? It is a center of all economic financial activities. So that's why it is given the role of central bank. Right? And in India, the central bank is known as RBI, right? Reserve Bank of India. Right. So going to Reserve Bank of India, before going to explain their role, power, and function of Reserve Bank of India, it's very important to understand why and when Reserve Bank of India came in the picture, right? Most of you know that it was established on 1st of April 1935, right? But in India, banks do have an existence even in the mid of 18th century. From the mid of 18th century, there is an existence of bank in India, right? So let's rewind. Let's rewind. Go back to the ancient time. Go back to the ancient time when people and their needs are very simple, right? And in the name of economic activity, they can exchange the goods which they need most, and that is known as barter system, right? So barter system even works today, right? Barter system. So through the barter system, trade and commerce activities was going on. Gradually, when humans went for a more organized way of living, from small village to state to empires, right? Then the need of humans was getting more complex in the nature, and that these complex needs and requirement cannot be traded in the barter. Maybe what you are offering me, I'm not interested in that, right? So from barter, human civilization moved towards payments through valuable stones. Stones was started being in use, but the problem with these stones, you cannot exactly quantify and give the proper shape to them, right? You cannot give the proper shape to them. So this is why there is a problem with the stone. Then metal. Metal become in use, and even till then, uh, in Europe, especially in Europe, till then 7 to 8, and even till then 12th century, gold was not in use as a currency. Other metals were in used, right? When Europeans started exploring the world, some of the European explorers went to the South America. Then they found the gold. And from 14th, 15th century, gold came to Europe in the form of trade. Gold was already present in the Europe, but for the purpose of trade and commerce, for the payment purpose, gold being used from uh, 12th to 13th century onwards in the proper manner. I repeat, that was in use, but as a proper payment system, it was starting use from 12th to 13th century, right? And then the conquest was started to have more gold because it is most precious metal which is not found in most of the part of Europe, right? So gold, silver, and copper. Gold, silver, and copper was started being used for the purpose of trade and commerce. Right? Gold, silver, and copper, and some other metals also. Right? But these metals were primarily used, and you can easily give any shape and size to these metals. Right? Even you can kind of have imprint of the image of your ruler. Right? So that is why metal is preferred over the valuable stones. So they were in use. However, since the beginning of industrial revolution, this industrial revolution have one significance. Why it is having one significance? Before industrial revolution, for production, machines were not in use. So your production capacity was limited with human hands. So production was limited because production can be done through the human hands only, right? And human have limited capacity, right? They cannot work, a single person cannot work for 24/7. They need some rest, right? But under the industrial revolution, machines were introduced, and machines give you the capacity to produce 24/7. So before industrial revolution, especially where the industrial revolution held in Europe, largely concentrated in Britain, France, and other European countries, Western European countries. In those countries, situation was like this is the market supply and this is market demand. But due to industrial revolution, you are able to work 24/7 and you are able to increase your production activity in multifold, right? Surplus. If you are able to sell the surplus, you can generate more money and you can generate more profits. So that is why different countries have formed their companies. British East India Company, French East India Company, Portuguese East India Company. Lot of companies were formed in the Europe to do the trade with eastern part of the Indian subcontinent, East India Company. Similarly, other companies were also formed. So the primarily objective was what? To do the trade and business. But what is important for us to understand here is when production is going to increase. For production, I'm again and again telling you what. Before industrial revolution, what you need? Land and labor. But now capital in terms of machine is also there. Right. So if you will increase the production, if you want to increase the production, then you need a much bigger flow of money in the system. Earlier, because production activity was limited, so limited amount of money supply. Limited amount of money supply was there and it is sufficient for the system. But when the production activity jumped in the very fast manner, then you need what? More money supply. More money supply and good flow of money. In the very first lecture, I explained the liquidity, right? If it is not explained, don't worry, I'll explain you later. But here, the money is required. I'll explain liquidity later. Maybe you will get confused. So just focus on money supply right now. We will talk about the liquidity later. So a lot of money supply is required. If you want to increase the production, not only increase the production, for purchasing also, you need more money supply. So system need more money supply. And that money supply is based on coins, right? So that is based on coins. So in Europe, some people who have the huge deposit of gold, they started issuing the promise on the paper. They started issuing the promise made on paper. This paper, just giving you an example how these paper were being issued. This paper is having the worth of 100 gold coins. This paper having the worth of 100 gold coins. After 1 year, I will take back this paper from you by paying 110 gold coins. Person A need some money, right? So person A went to person B who have money. He said that I'll give this paper to you, and after certain point of time, I'll take back this paper by returning you 110 gold coins. Right. So in this way, promise was being started making on the papers. Right. And gradually these papers themselves used for the transaction purpose. Initially, they were used only for transaction. Transactions were made in gold, made in silver. But gradually, because they are in circulation and these papers were being started using by individuals. So some individuals who think that if, for example, person A need money and he went to person B. So person B, person C, person D, all they thought that why we should not make an kind of company which can go for this business of lending, because it's a profitable business, right? So they formed a bank. You know why it is called as a bank? Why they known as a bank? Why the term bank is used? It's coming from different thing. It's coming from the geography, right? There are two terms used: river bank and river side. Side of the river and river bank. In Sanskrit and Hindi, it is known as river. River bank is known as Nadi ka Ghat. Right, the famous banks in Banaras ke Ghat, Daswashmekh Ghat, right? And in South, River Godavari, there are some famous ghats, right? So ghats is a river bank, where is a river side, right? Riverside at the time of summer or drought, the water is not going to be there. But at riverbank, some amount of water will be definitely there. Doesn't matter what amount of drought or summer heat is there, some amount of water will be there. So that is why it is known as river bank. So when we say bank, we presume that something means, in case of river, some amount of water will be there. In terms of finance, if it is the term used bank, some amount of money will be always there. And those people who have started these business, right? They always have a money. They always have some amount of money to lend others by taking promise from them, right? By taking promise from them on a paper. So a note was started being issued by these banks, and hence they are known as bank notes. What you can see on the Indian rupee: I promise to pay. There's a promise is made on the note or not. I'm not talking about the currency, I'm just talking about note. Right now, I am talking about note, the note which is issued by bank, and people trust on that note, and on the basis of trust on that note, they do the transaction, they do the business, trade, and commerce. Right. So, industrial revolution has pushed the flow of these banknotes in the financial system in Europe. And European came different part of the world, including India. So who bought that banknotes in India? British and French. Both companies, French East India Company and British East India Company, both have bought those notes. Even if you will get an opportunity to visit a museum of State Bank of India or Museum of Reserve Bank of India, you can see those bank notes issued by who? Banks. Banks established by those companies, right? So bank notes came in the circulation, right? And why we need the banks? We need a bank for payments and their settlement, trade and commerce. All of us know, all of we know that in India, Britishers started what? In India, Britishers started trade means started financial institution. If you don't know, I'll let you know where they have started the trade and commerce in India. At least you are aware of this thing, na? You are aware of companies, British East India Company. Are you aware of the British East India Company or not? Of course, you are aware of British East India Company and even French East India Company. So, British East India Company and French East India Company, they fight neck to neck to have influence over the India. But fortunately, British East India Company won that thing in India and they established their paramountcy in India. Right. So, by the end of 18th century, they have established their complete dominance in India. Right. And in India, because they have dominance and for their administrative convenience, they have established some different administrative territory. So they have established the administration, they have established each and everything, but they also know that for proper functioning of the system, we need a bank so that we can do the transactions here in India, and whatever we are going to earn here we can smoothly transact and transfer to our home country. So understanding this need, they have established Bank of Calcutta in 1806. Later in 1809 they changed the name of Bank of Calcutta to Bank of Bengal. And Bank of Bengal have a power to issue banknotes, and these banknotes were accepted by East India Company and its territory as a medium of exchange. Right? British were on expansion, so apart from Bengal, they have also established the presidency in Bombay and Madras. So accordingly, they also established Bank of Bombay and Bank of Madras in 1840 and then in 1843. So three banks, Bank of Bengal. Actually, Bank of Bengal, it was established as a Bank of Calcutta. Later in 1809, it got the status of what? It got the status of Presidency Bank, the bank which worked for the Presidency of Bengal. Right. So 1809. So these were three presidency banks with power of issuing banknotes, and these banknotes were accepted by a company in India for exchange purpose, right? And all of you know that after the revolt of 1857, companies rule was ended in India, and government took the Indian territory, and we came under the rule of government. So government found that we need to have a uniform way, because these banknotes are issued by whom? Bengal, Bombay, and Madras. So government want uniformity, and to implement that uniformity, one very important act was passed by the British government known as Indian Currency Act of 1861. Through Indian Currencies Act of 1861, government has made it very clear now only British India government have power to issue banknotes. I'm repeating. Now only British India government have power to issue banknotes. No other bank have power to issue the banknotes. Only British India government will issue the banknotes. But the point is, government is not a bank. So that is paper note. Paper note issued by government of India. So is 1 rupee note, today's 1 rupee note is a bank note or currency note? Is a bank note? No, it's a currency note. Why? Because still 1 rupee note is issued by whom? 1 rupee note is issued by government of India. So any currency issued by the government of India, that is currency note. That is currency note. If any note is issued by the government itself, that is currency note. And if any note which is issued by any bank but accepted by the government of India as a currency, then it become what? Currency. So what RBI is issuing these days, that is what? Banknote, which is accepted by the government of India as a currency. Which is accepted by the government of India as a currency. Do you remember the day when Prime Minister announced about the demonetization? He announced the demonetization, right? What he actually did, as per RBI Act, as per RBI Act 1935, the bank notes issued by RBI shall be accepted by the government of India as a currency. Whatever the bank notes will be issued by RBI shall be accepted by the government of India as a currency. However, government have power. Government have power to demonetize it. Government have the power to refuse or can stop the circulation of those banknotes as a currency. So till then government is accepting that note as a currency, right? Till then it is going to be used. Prime Minister said that from midnight, 500 rupee note and 1000 rupees note, right? 1000 rupees note is not going to be accepted as a currency, right? So when government made this order, still that was a bank note. 1000 rupee note was still the bank note. Even after that order, it was a bank note. That will be remain bank note, but it cannot be accepted as a currency, right? It cannot be accepted as a currency. So the point is, if under the Indian Currency Act, British India government took this power. British India government took this power to issue currency notes on its own. Then what happened? Why government of India, British government of India has given this power to Reserve Bank of India in 1935, right? What happened in between, right? What happened in between? Why these things happen in 1935? Why RBI was established? So in the next lecture, you are not only going to know why RBI was established, what was the need. If government is capable of printing the currency on its own, then what is the need to have a separate organization known as a central bank to issue the currency? For example, right now government of India is issuing 1 rupee note. Government of India can issue other notes also. What is the need to have an RBI? This is very important, and this discussion going to let you know how exchange rate works. What is gold exchange rate? What is gold exchange rate and other exchange rate system? How these exchange rate systems work? You will get the basic principle and idea in the very next lecture. So next lecture is going to be very interesting. I'm going to explain not only why RBI was formed, I'll also going to explain you in the same discussion you will get an idea how the exchange rate system work, right? So for today, thank you very much. In next lecture, please come and attend that lecture. It is definitely going to help you to get the broader understanding of how central bank works and exchange rate system work. Okay, thank you very much.